Hello, and you're welcome to Global Business Insights, where we look at some of the headlines, go deeper in sharing insights. Indeed, it was a busy week for central banks. But before we look at some of the central bank updates, the United Kingdom retail sales increased more than expected at 1.0% over the month. That was this morning data. That was in August, after rebounding 0.5% in July. The core retail sales, that is stripping the auto full sales, rose 1.1% month on month against the previous jump of 0.7% and the forecast of 0.5%. The Bank of Japan, that's the BOJ, held its short-term interest rate target between 0.15% and 0.25% today, following the conclusion of its two-day monetary policy review. Also today, the People's Bank of China, PBOC, said it would hold the one-year loan prime rate at 3.35%, as well as the 5-year rate at 3.85%. Yesterday, South Africa's central bank cut interest rates by 25 basis points, the first cut in 4 years, and also signaled a more optimistic outlook for inflation. Governor Lesetia Kenyaho, in a briefing, said the Monetary Policy Committee reduced the benchmark rate to 8%. Analysts expect more rate cuts in November and May, consistent with lower inflation over the next couple of years. The Bank of England voted yesterday 8-1 to keep interest rates on hold at 5% after a cut last month. The Apex Bank is adopting a more patient stance despite recent data suggesting that the threat from consumer prices somewhat abating. On Wednesday, UK inflation held at 2.2% in August, below the Bank of England's forecast for 2.4%, but still higher than their overall target of 2%. But services inflation still high at 5.6%. The Bank of England says inflation is expected to pick up again to 2.5% by the end of the year, but that's still lower than the previous 2.8% forecasted. The UK GfK Consumer Confidence Index fell 7 points to -20, taking it back to January's level. Consumer confidence fell sharply in September as consumers anticipate the quote painful unquote promised budget, which is already hurting morale and causing households to hold back spending. It was yet another record day yesterday in Wall Street as investors, after a volatile day, eventually chaired the Fed's 50 basis points rate cut decision. The decision shows its focus has shifted from inflation to the labor market. The news that the US no longer needs emergency levels of monetary squeezing is expected to be bullish for risk assets. The Fed's half percentage point interest rate cut may also pave the way for new debt issuance by African nations, including countries like Nigeria and Angola. And in Nigeria, President Tinubu yesterday said the Coca-Cola company has announced plans to invest $1 billion in Nigeria over the next 5 years. He restated his commitment to creating a robust financial system and a business-friendly economy that will attract more foreign direct investments. Our deep dive today is on consideration of discussions at the recent Africa Food Systems Forum, AFS Forum, the world's premier forum for African agriculture and food systems. This year's summit, held in Kigali, Rwanda from September 2 to 6, 2024, was under the theme Innovate, Accelerate and Scale, Delivering Food Systems Transformation in a Digital and Climate Era. There is an opportunity to feed Africa. I will be discussing more about how this can happen. The Bank of Japan policy statement this morning, as the Apex Bank held rates constant, stated that the decision was unanimous. The central bank abandoned negative interest rates in March and raised the key rates to 0.25% in July, as it sees an economy on track to achieving the 2% inflation target. Bank of Japan Governor Kazuo Yoshida said last month that the central bank would continue to raise interest rates if the economy and inflation stayed in line with the central bank's projection, and analysts see at least another rate hike by end of the year. The bank added that Japan's economy was recovering moderately but still with some weaknesses, noting that inflation expectations were heightening, albeit moderately. Japan's inflation climbed 3.0% year-on-year in August compared to the previous reading of 2.8%. The CPI ex fresh food arrived at 2.8% year-on-year as well in August, versus 2.7% prior. The latest CPI release represented the fourth straight rise in inflation, thus suggesting the BOJ could still continue to tighten. Bank of Japan predicts that inflation is likely to be at a level generally consistent with their own price target in the second half of the 3-year projection period through fiscal 2026. Japan's economy forecasted as likely to achieve growth above potential given a trend of a moderate rise in consumption. The bank also noted that they needed to be vigilant on the impact of financial and especially FX market moves on Japan's economy and inflation. Experts in Nigeria are saying to realize the potential of its non-oil sectors, it must prioritize improvements in infrastructure, enhancing security, simplifying regulations, and expanding access to financing as part of the critical steps. And agriculture is at the forefront of this shift. Nigeria's agri sector recorded strong growth in Q1 2024, with exports rising to 1.04 trillion naira. That's a 123% increase from the previous quarter and 270% rise compared to Q1 of 2023. This surge was particularly driven by agri exports, sesame seeds and cocoa beans, with demand particularly strong in Asia and Europe. But this is not the big opportunity. Focusing only on exports to Europe and Asia is somewhat perhaps misdirected at a time when the West and indeed the East are becoming less global and protectionist, with the geopolitics resulting in an ongoing recalibration of trade. Africa is a yet untapped opportunity if leaders can adopt a more transformational approach that will result in wealth creation within the continent. Listen to the discussion at the recent Africa Food Systems Forum, that's AFS Forum, which is the world's premier forum for African agriculture and food systems.
The Africa Continental Free Trade Area, how can we make sure that places on the continent where there's surplus, that can flow down to Namibia and parts of Southern Africa that are facing this massive crisis right now?
Both the Minister and Dr. Mwangi spoke about access to markets. The continent of Africa imports over $100 billion worth of food annually. Rice, maize, soya, different types of grains. The highest import tariff that ourselves as Africans impose against one another is 65% on agricultural products. So if you look at on the range of what we call tariff peaks, the largest and the highest tariffs that we impose against one another as Africans is on agricultural products. And yet, we are importing over $100 billion worth of food from other parts of the world. Now, if you go to Zimbabwe, if you go to Ethiopia, Ethiopia had a surplus on wheat, and so did Zimbabwe and a few other countries. The barrier that we must eliminate as a matter of urgency is intra-Africa prohibitive tariffs for trading in agricultural, basic agricultural products. This is the number one challenge.
Ukraine feeding a lot of the continent. Even during a war, they have a project called Grain from Ukraine that is still sending us grain going to Ethiopia and Somalia and other parts of the continent, that we rely on a country at war to feed ourselves. Yet, even when we are starving, we make it so hard for food to come from the neighboring country or a country 2 regions down. And this is not changing. I wonder how to unclog this. Dr. Mwangi, you speak to African presidents. What are they telling you? I put him on the spot. He doesn't know how to start. How to say this diplomatically.
Thank you very much. I think, my brother, the Secretary General of the African Continental Free Trade Area, I think the African leadership is coming to terms with the reality. And the reality is we have to change. It hasn't worked, and it is sad if we expect to continue doing the same thing and expect change.
Right, because I think you saw President Museveni was in Nairobi a couple of days ago, and he said, "Oh, you're blocking my eggs from coming in and my milk from coming in," and he was like, "This makes no sense. We're the same people."
Absolutely. So I think that change, and that's what Rwanda has called for. That change must come today, not tomorrow, because as has been said, there is a window of opportunity. Global geopolitics have disrupted the supply chains. That gives Africa an opportunity to fill those supply chains with its own production. Before COVID, Ethiopia was importing wheat. We just now had, Ethiopia is exporting wheat, including Zambia, countries that were not producing. So it can be done within a very short period. But there must be a coherent policy position that is integrated and makes agriculture a productive economic sector, not a social sector. But it will not happen until we build the capacity of the farmers. The farmers we are talking of feeding Africa, 45 million population feeding 1.3 billion, it's not peasant farmers, it's commercial farmers. How do we convert our small-scale farmers to be agribusinesses? It's just a shift from peasant farming to agribusinesses, and they populate the value chains. Then they become competitive, and then they're able to play in the market. At the moment, the structure is designed to make them fail. The structure is designed to ensure Africa never feeds itself. So it's upon the leaders to make that critical change. Africa has 65% of unutilized arable land. It has the most youthful population. By 2050, it will be 33% labor force of the entire world. So the ingredients of change are in place. So what we are lacking is, I don't want to say leadership, let me call it policy direction.
You can also say leadership. We're among friends here.
So we need a transformative leadership, not the normal, usual leadership.
A transactional leader can supervise people to do what he or she wants and manage resources to achieve goals and objectives linked to assigned tasks. Transformational leaders are trusted leaders who create a compelling vision of the future and inspire their followers to work towards that vision. Transformational leaders encourage out-of-the-box thinking that upends the status quo, and they know how to build strong, cohesive, and committed teams towards the shared, bold vision. They inspire and motivate people to achieve that vision. In this case, the renaissance of a greater Africa that maximizes its many inherent strengths, helping individual countries to be much wealthier than they could, is certainly imperative. Asia Pacific markets did extend some momentum, moving higher mostly. That's in today's session, after both the Bank of Japan and the People's Bank of China held rates. And that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Thanks very much for watching. Bye-bye.